Hello everybody, welcome to another video. Now in this video, I'm going to be taking you guys through the zero drawdown case study from a couple days ago. Actually, it was all traded on Bitcoin. So I'm going to show you guys exactly how it was traded, how you could have traded it, and basically how to master it properly. Okay. So the day that I'm referring to is actually this day over here, which is the 1st of January. Actually, yeah, 2nd of January. All right. So if you come back here, we're gonna go replay mode until 3 a.m. Eastern Standard Time. And what we're gonna do is we're going to put the Trade Easy dashboard. All right. Now, in the Trade Easy dashboard, what you can see is that we have Asia being manipulation. Okay, so that means I understand that the day is going to be quite easy because we are getting in Asia that was the distribution. So they're going to have a daily profile that's going to be a continuation, right? So now what we're looking for is we're looking for price to break a structure, as you guys know, right? So what is the structure? So structure is based, of course, the high, right? Want to see price take out the Asian high because remember, as I've always told you guys, you are looking for the Asian range breakout. Okay, the Asian range breakout is key to not getting your ass handed to you intraday. Okay, so wait, there we go. And now what are we interested in? We're interested in the candle that broke structure, which is this. Okay, I'll go one step further to the 15-minute chart because it can go a bit deeper for that 15-minute candle. And what you'll see is we have this fellow right here as well. Now that we understand that price has gone and done the necessary inducement, right? Like this, what you will do is you go to the lower time frame, 1 minute chart, 3 minute chart, and you're going to look for an entry. Okay. Now, just for the purposes of this video, I'm not going to go back and forth. I will show you how to do this in an alternative manner. So what we'll do is we'll look at an inverse fair value gap. Okay. We have that. I'm going to put an entry here, keep my stop loss based on the IFVG entry protocol that I have given to you guys on this channel. It will be somewhere here. Okay. Now, after this, what we will do is we will take this manipulated range there, and we're going to put our TP at 3 standard deviations right there. Okay. Now, let's see how this would have worked out. Perfection. Okay. Now, let's move on to the next trade, right? So, I took all these trades. Now, we can see that London also was a manipulation. So, it's a good sign that we are going to go higher. Okay. We had the news driver towards the New York session. So, we're going to wait until that news driver passes. And look at the time, right? Here, we are not really interested. Yeah, this is the daily macro, right? But in this daily macro, I'm interested in that New York session macro as well. Okay. So wait. You can see that price has gone and taken another look. And what we'll do now is we want to see, okay, what is the structure that's being referenced, right? If you go to the left, we can see that price took out this high there. Okay. And if price is coming all the way down, is there a 15-minute candle that overlapped this high? So let's check 15-minute. On the 15-minute candle chart, we have this guy right here. So this candle is going to be that point in which we're interested for price to trade higher. Okay. Now you go to the lower time frame, you do your own magic over there, and then you will get in a buy. Now here, there is no IF feature that I can reference. So now I'm forced to go to the lower time frame just to show it to you guys. So we go to the 3-minute, nothing. 1 minute, I got something. So on the 1 minute, I have this IFVG here. Okay. What we'll do is we'll put a buy, keep a stop around here. Why? Because now these are volatile times, right? We have news, price is going to whipsaw on necessarily. So I'm going to keep my stop a bit wider than usual. All right. And after that, what we will do is we will do our projection. So our projection for the time being, is going to be from this high to this low. Okay. Alternatively, we can use the Trade Easy statistical tool, which is somewhere here, there. Now we can put our TP at the statistical levels. So one is there, and the other one is up over here. Okay, so those are the statistical distribution levels that we would be interested in. So we can say I'll take partials here and I'll put my full TP here. So let's see if that works out or not. So you can see price went up, you will take partials, price comes back down. Now, after it comes back down, we need to understand this one thing, right? We broke structure again. So how are we going to enter one more time? Okay, how are we entering this one, just one more time? So here's how. We see that price took out the candle that took out this high and they went up, right? Okay. Now I want to see why it's coming back down. If it's coming back down, then there must be some bigger story that we're missing. Yeah. So we can see that it is this 15-minute candle that took out this structural high. So that's your inducement. Now from that point, I'm interested in the IFVG. Where's my IFVG? Nowhere to be seen, apart from the one that we already have, right? So what we will do then is we want to see here, do I have any IFVG formation? So we go to the 3-minute chart. On a 3-minute chart, we have this one right there, right? So we will wait for price to go and close above it, and then we can take the trade. Okay, don't worry about this. It's going to be wider than usual. It's going to be here, not here. It's going to be here. Now still we're waiting. We're waiting for the IFVG. Yes, here's one, because you see price reacted and failed. Right from there, I'm interested in going long. So I'm going to press buy, stop loss below here. And what we will do is we will put the same take profit there. All right, and we'll take partials at the high. So we're taking partials. Price came back down. Note how I didn't say break even, right? Taking partials only because I know it's going to be a bit volatile. And we'll wait and see whether price rallies. Yes. So now I'm going to take major partials out and I'm going to move stop loss to break even. And we'll see whether price hits there, hits the higher in the next day, which I don't think it did. Yeah, so we forget about that for now. Now we'll keep it like that, and I'll take you guys through this day. Now this was easy, very easy, because we have Asian being manipulation, which meant that the day is going to be extremely easy, right? But the only time in which the day is going to be extremely bloody hard is when Asia is going to be an accumulation. So if Asia is an accumulation, London, you don't know what's going to happen. It's either going to manipulate or it's going to be a large scale accumulation by itself. So I'll show you guys what I mean. Okay, so take a look at this. Now here we don't know. We'll wait until 3 o'clock. There, right. So we can see that not yet. My bad. Here, we can see that the daily bias is bearish. Yeah, and price is trading down. Perfect. Okay, Asia is an accumulation. London is supposed to be a manipulation. So if London is a manipulation, then all signs point to basically having a thought process that says, okay, if London is like this, then we should see price manipulate lower and go up. If London is manipulation, we should see price manipulate lower and go up. Okay, that's correct. But we need that London to be a manipulation, meaning we need to see an expansion, nice big expansion, of course, ideally to a key level. So if I'm thinking of a key level, I'm thinking 4 hour and above. Okay, so that would be a Malaysian SNR. So where's my key level? My key level is here. Price closes through it, but as long as the next candle moves back immediately, I am completely fine with it, right? On the daily chart, there is no key level. So 4 hour, we have that. 6 hour, nothing. 3 hours, nothing, right? So this is the only key level that we have to suggest that, okay, if this is a manipulation, then this is the guy that we're going to move off of, right? So what are we doing now? We're waiting for price to come to the macro, all right? So we came into the macro. And after coming into the macro, then thought process is, where am I going to buy? Right? So our thought process when we come into the macro is, okay, we came into the macro, but now my problem is, how am I going to buy in order to take advantage of this price move higher? Okay. So we know that we came into a key level. We know that London is a manipulation. And we know that the New York expected condition is seek and destroy, bullish seek and destroy, meaning any bullishness we'll see will be met with upside moves, right? So we saw that there's a structural break here. We'll check the 15-minute chart also, right? And we can see that uh, this candle broke it, but this candle also overlaps with this high. So that candle can be of interest. Now we'll go to the 5 minute again, and we will see whether price comes and hits that or not. Okay, it hits. Now, upon hitting, we know that that's inducement. So after that inducement, see whether we have an inverse gap. Yes, we do. Why is this an inverse gap? Because we come, we react, and then we fail. So that inverse gap is important. Okay, it's important that you have that. So what we will do is we will buy, keep your stop below that point, right? And now we know that this is a manipulation. I'm going to take this high to this low, right? And we have that earlier buy target here, right? So might as well just push it all the way there. All right. Now for this day, the statistical application is suggesting that we have a distribution level here, and we also have a distribution level there. So having said that, we can say that, okay, you know what, let me push it all the way here. That's a possibility, let's say, right? But we want to be taking most of our partials at this blue line, okay? Not mostly, I'd say 80% of your partials at this blue line. And note that this is now your supposed zero drawdown entry, okay? Okay, now we saw that price broke the high. What are we doing? We are waiting for price to hit this time, this time interval here. Okay, we are not concerned about anything right now. So waiting, hit. Okay. Now at this point, we know that manipulation, this is going to be distribution. So having said that this is the distribution, as you can see here, New York distribution, PM continuation, I'm thinking to myself, okay, here's my break. Here is the candle that took out the structure. If I go to the 15-minute chart just to see if I'm missing anything, I can say that, okay, we took it out here. We hit that, we took it out and we went up. Perfect. So upon inducement there, I'm thinking, where's my IFVG? Like, do I have any inverse gap associated with this inducement? So let's see. Let's go back. Yes, we have something here. Okay. Do we have anything lower than that? No, nothing that can be seen because these are all breakers. So I prefer the IFVG. Okay. Now let's say that, okay, I want to buy. So I buy over here. Stop loss is going to be below this inducement point. Okay. Because now you're entering late. Already reaction already happened. Price came back down. So this is the safest spot to put your stop loss. Now, what we will do is we will put the same TP here. Partials will come again here. Okay. So trading higher, we take partials, 80% off, stop loss move to break even. And that's that. So we saw that the PM session also was a continuation back there, right? So these are how you can get your high probability zero drawdown entries. Now let's take a look at Saturday's price action. That if you traded this Saturday and Sunday, you did get your ass handed to you. Even if you took a sell, that sell got wiped out immediately. If you took a buy also got wiped out immediately. Okay, so don't try to bullshit. All right, so take a look at this. We have Asia being manipulation. Okay, so we know that if we break below, we can look for sells. That's a given, right? So in this case, what we can see is we took out the Asian low here, yeah, this one and this one. Nothing took out this high, nothing also took out this high. These two highs have not been taken out at all here. Okay, so if you look at the 15-minute chart to check which candle broke it, we can see that it is this one. All right. This is the one that should be taken before you can even entertain any trading move to the downside, right? Now, before we move forward, you also have to understand one more thing, and that is essentially that when you're looking at the price action over here, you can see that the other box over there, there was a breakout structure that happened early on here. This one, yeah. So that is also a point, right? Right there. Now, if you go to the 5 minute, it is also this one. So we have like a small range that we can look at, which were responsible for breaks of structures. Okay. Now, how do you reconcile this? We want to see price come and move from here or price come and move from here during the macro timings that I have taught you guys. It's not gonna be before that. It's not gonna be after that. It has to be during that. Okay, so these are the most important macro timings that you will be using. Think carefully. These are the most important macro timings you will be using because it's not capped. You can see that it's working, my creations. Okay, now let's take a look. You're not bothered with serves. Don't even think about taking a serve. Why? You're going to get fucked. Okay, see? Look at that. Okay, now you see price reacts and goes down, and then goes back higher, right? Because yeah, it happens inside the daily macro. Yeah, it happens inside the daily macro, but these are just the earlier portions of each session. This is the most important one. So here's why. This is the 940 to 11, and this is the 520 to 7. So between 520 to 6, we have the London session. So it should that inducement should have happened here, or it needs to happen after this. So watch carefully. Yeah. Now we hit that, right? Now after hitting that, we need to see, okay, is there an inverse gap that I can sort of pair this with? Let's see. We have this one. Yeah. So what will you do? You take a sell. Assuming you don't want to wait for confirmation, right? You want to take a sell. Stop loss above that point. Here, this one, there. And your TP is going to be this low, of course, right? That's all. And you see, it's within this macro. So how am I bullshitting you? I'm not. Chill. Okay. Now, once this happens, you can see that that is done. Okay. We had Asia manipulation, London accumulation, right? London accumulation. So that means New York session is going to be a manipulation. So what does this look like? A manipulation. Now I want to see, do I have some form of SMT divergence? Now guys, I'm using CVD SMT divergence, okay? I'm using CVD SMT divergence, which is cumulative volume delta SMT divergence. It's some kind of a volume SMT divergence that I'd say is way, way, way better than ICT's method of using SMT divergence, right? So you guys know that. So now listen carefully. Once you see this happen, once you're in this macro, once you take the trade, once you do every single damn thing that you're supposed to do, okay? Listen carefully. Once you do every single damn thing that you're supposed to do, what next? What next? What's next is you don't touch price until the next macro, right? Meaning, when is your next macro? Next macro is here. This one. So what are you doing? You're chilling. This is all just data to you. Data, 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 boom. Now you are in the macro. Okay. Now that you're in the macro, what we will do is this. Check and watch. So we'll delete all of this here. All right. Now we saw that, okay. We took out the Asian high. Which candle was responsible for this? This one. Okay. Now we took this high. Which candle was responsible for it? This one. Now there is a problem. There are feed discrepancies. Other feeds don't have this massive spike. Okay. Can you see that? Other feeds never had this massive spike. So how would you have taken this trade? Right. How would you have taken this trade? Here's how. You see how even this candle overlap with taking these highs, right? So that is also an important candle, right? See if it overlaps with anything. IFEG, IFEG, IFEG. Yes, here. See that? Here's the reaction and then it failed. That's the one. So then you will buy here, stop loss here. Where's your take profit? Your take profit is going to be this. Do this. Do this. Partials and break even. Done. That is that. Now I called this trade yesterday in the public Telegram group. Okay. So these were the breakdowns of every trade that I took this week. I took this, I took this, I took this. I did not take this. I took this. I did not take this. I took this. If you don't believe me, you can go to the Telegram chat and you can look at the screenshot I sent. Bottom right corner over there, you could have seen my trade execution. Okay, always back it up. Now, let's take a final look at today's price action, which is Sunday. All right, so we'll wait until 3 a.m. Eastern Standard Time. Uh, so let's wait. Okay, so we have bearish bias, right? So with this bearish bias, we need to understand that we are thinking the price should be bearish. We are thinking that price should be bearish. Okay, everyone's happy. Bye bye. Right. However, look at the price phase. Asia is an accumulation, right? Then London is a manipulation. Oh wow, supposed to be manipulation, right? Okay. Now, if it's like this, within that macro timing here, we need to have the inducement. Okay, we need to have the inducement within this macro timing. Where if I look at the 15-minute chart, right, my point of inducement is either this because it overlaps with the low or this. So now if you go back to the 5, we can see that this one big candle was responsible for taking out the Asian low. So that's also that. Where is my inducement? Can you see? It's not there. It's not there. So when price came down here, yeah, when price came down here, question then becomes, what's going on? Okay, listen carefully. Now when price came down there, macro did not do the necessary thing that it was supposed to do. Okay, the macro did not do the necessary thing that it was supposed to do. Now what's going to happen? Now what's going to happen is you got to wait and see whether here between 520 and 7 we get that inducement. We don't. We don't. And then price goes and induces. Price goes and induces one more time. But then the question is, okay, from here, if it's inducing this outside of the macro timing, what's going to happen here? Because this is the supposed New York macro that's supposed to give us the main move. So if anything is happening here, it's bloody fake. You see? Now you see what's going to happen next. If this is my macro, I want to see, okay, accumulation, manipulation, what is price going into? Yeah, look carefully. What is price going into? Price takes out previous day's high over here. Look carefully. Go to the 15. Okay, on the 15, what we can see is that candle took out the previous day high. Okay, here inducement, bada gone. Right. So how do I reconcile that? That what price you're going to be reacting from? I'll check 30 minutes because you need to check every time frame, right? Every time frame matters. So 30 minutes, we have this, which price took out there. Okay, let's check 1 hour. Here, price took out. Oh, wow. Okay, 4 hour. That's your final stop. 4 hour. Here, we have, that's your point of inducement. Okay, now we have everything. We go to the 5 minute and we see that, oh, okay, fine. In the incoming macro, price has already hit that inducement. Yeah, what it's supposed to do. Okay, now I see that this is the inverse gap. So what am I going to do? There, within the macro, buy. So me, what I'm doing is I'm buying here. Stop loss below the IFPG. And what's my take profit? My take profit is going to be either based on the statistical levels, which is there and there. Okay. Here, let's just say here for now. Right. So if this is a trade that I'm taking, I'll be holding it until that. However, I need price to go above the Asian high. That's the only way this is going to be safe. Otherwise, this is not safe at all. Because look, we finally come for that inducement. Okay, we finally come for that inducement. Look at the time in which it happened. The time in which it happened is between that 9:40 and 11 time interval. So if that is an important time interval, and if this is an important price level, then we can consider this an inducement that has been done inside of the macro. And if this inducement is done inside of the macro, then my friends, this buy may not play out. Okay. In fact, this buy not playing out means we have this low being taken, right? So we have this down close candle is taking it out, and this up close candle that's overlapping with it. We have some kind of a double inducement there. This is the only two candles that matters, okay? Nothing else here, right? And if price hits that and you want to go short, this is the short. IFVG, where IFVG is this one, so it doesn't matter there. Stop loss above the IFVG point. Okay. And what's my take profit? My take profit will then be the distribution levels that this one has here. One is down here, and the other one is down here. So one is going to be, I think, 200 pips away. Other one is going to be 300 or 400 pips away. And this is going to be the setup. I prefer going for the first level of distribution, but yeah. So this will be the setup. Okay. And this won't be the setup. This will be the setup. So whenever you have something that suggests that we are going to actually trade higher, it is always better you wait for the London range to be traded through, which is this range. Okay, this entire range, you want to see it trade outside of that. And that is how you will be able to know that, okay, you know what? I am in the right direction. Okay, so I hope you guys found this insightful. If you are interested, you can definitely join my one-on-one, or Trade Easy is now not $150 per month. Trade Easy is going to be $39.99 a month, so that everyone can have access to it. All right. So that's pretty much it. If you guys found this insightful, please do comment something nice. I would love to see if this helped you guys out. Do go and backtest the inducements. Do go and backtest the macro plus the inducements, because uh, as a creator, I can tell you, when you get this shit right, damn, it's damn easy. There are days in which it's going to be damn hard like this. You don't know what you're doing. It's okay. It's okay. These are seek and destroy. Seek and destroy means you're going to fuck it up eventually at one point. But make sure that when you're in a seek and destroy situation, you don't really, lose a lot. If you feel like, okay, you know what, I'm buying, it's not working, I'm selling, it's not working, stop for the day. Trust me, I've learned great deals of lessons with this. Not following my rules. Okay. Right? And another thing is you guys will also get access to my macro projections with the bias. So for example, if you know that price is going to sell off, you have the bearish bias, select bearish, and it'll show you projections in which you can get sells. So essentially what this means is, if you're going to get a sell projection, let's say over here, what better way to get a sell projection than hitting that level first and then getting the sell? You see, so if you get a sell projection here and you know price hasn't done its inducement, wait for the inducement. You know you're gonna get a sell, boom. Okay. Here also, we saw that price already did the inducement. So when it hits, it's just gonna sell off completely. All right, it happens every day, every single time. So yesterday also, you can see that we got multiple sell projections over here, and they didn't work out at that point because we saw that the selling the inducement was down up over here. So when price hit that, we could have sold because we got the sell projections. Okay, and show you guys one more example. You can say that, okay, if I want to put a buy, here's the buy projections, right? We can see that within that retracement, price broke somewhere here, inducement happened, so buy. Okay, and we saw that there's a buy projection over here, right? So what can we do then? Wait for the break. There's the inducement, you know it's going to work out, boom. Same thing over here, buy projection inside the macro is the inducement, boom. Okay, so it works out every single time. I use this as the basis of my trades as well. It's telling me exactly when I can look for sells, exactly when I can look for buys. I know how to align all of these things together, and it essentially works out perfectly. All right, so with that said, I'll see you in the next one. Good luck and good trading. Bye bye.